No, there's not much change since last month, which is a bit of a relief because last month inflation went up by a whole percentage point, which was more than the bank was expecting. So this has steadied the pattern a little. So I don't think there's anything here to change their disposition.
The only movement seemed to really be in airfares for the month compared to a large rise same time last year, so a slight retreat there. But when it comes to all the international threats we're facing, the situation in the Middle East that's moved the oil price now, what we've witnessed in terms of some of the trade concerns and the uncertainty that's bringing on investment decisions, do you think there's any forthcoming threat to growth that the central bank should be concerned about?
Yes, the bank last month divided 5 to 4 over the decision to cut rates a little, and the majority very much were seeing the economy slowing down, and that being the threat of a faster slowdown if tariffs and other US policy seeped through the economy. So that is the worry, and the question is, should we cut now or should we delay a bit? That was the way they were looking at it. The Middle East conflict, complicates this. Firstly, it could have an effect on oil prices, which could push inflation up even further. It hasn't this month, but it could. And secondly, of course, it could be disruptive to the world economy and to trade, which again would be a downward pressure on our growth. So that's precisely where the bank is at the moment. It's saying, well, we think the economy is slowing down. We're expecting that will require us to reduce rates, which are still at the moment restrictive. But should we do it now when inflation has just bounced up to 3.5% against a target of 2%?
Yeah, and yet wages look like, again, the two areas, John, where people were most concerned was wages and services. And the Bank of England wage growth, the wage growth only at 5.2% in the 3 months to April 2025 as well. So it is abating and is now significantly above the inflation rate as well. Even though we understand that average weekly earnings are obviously on the wane somewhat, and the Bank of England isn't as worried as they were. It's another factor for the Bank of England to be less worried about, though, isn't it, when it makes its decision looking at the domestic factors?
Well, I think the debate in the bank and elsewhere is based on this wage growth. 5% wage growth isn't really consistent with 2% inflation. So yes, it's coming down, it's inching down a little, but the question is it coming down fast enough? Can we start reducing rates before it comes down a percentage point or so from there? Of course, in terms of living standards, we benefit. Inflation is currently below wage increases, so people are benefiting. And that's another factor. But their main concern is, if you like, the underlying rate of inflation in the British economy. They want to see that rate of wage growth come down. And it is beginning to turn down, but is that enough? That's what they'll be debating tomorrow.